guys, and welcome to the structure video. In today's video we're going to be talking a little bit about structure. We're going to be talking about how we look at structure here at Raven Capital. We're going to be talking about the different types of structure. We're going to talk about some characteristics and just a few key things that you should keep in consideration when moving forward with the content in Raven Capital. So let's move on here. First things first, initially structure will always be king and will always be your number one priority when building a trade idea. Structure is the key to the market. When you understand structure, you understand the market. This is initially how we view it here at Raven Capital. Initially it is like this with any strategy. Should you understand structure, you should not be having a hard time even executing trades and just being on the right side in market in general. So continuing onwards here, just before we really get into this, structure is simple. Build criteria around it and stick to it. You're gonna have your own type of criteria as you sort of learn the strategy. So you need to sort of decide what you want to see in structure. You need to decide what's best for you, and just sort of build that criteria list of what you want to see and what you deem as valid. At the end of the video, my challenge to you is to focus structure for at least 3 to 4 hours to really grasp the concept around it, because as we know, practice structure, because repetition is an absolute king in this game. So the more you practice structure, the more consistent you'll become with it. So yeah, that's just basically it. Moving on here, we're going to talk a little bit about the application. We're going to be talking about bearish and bullish structure. Just some simple things right here. So touching on bearish structure, really simple stuff. A bearish trend contains several bearish structures. Bearish structures are forming a series of lower lows and lower highs. So if we sort of go into detail here, initially in this bearish trend we have a series of lower lows and lower highs. We can see we have a lower low, lower high, lower low, lower high, lower low, lower high, and that's pretty simple understanding. A few key characteristics taking away with this is initially a lower high can only be formed when we take out a lower low. So for a lower high to be formed, we would need to take out a lower low, as we can see sort of right here. We formed the lower high. After we've taken out the lower low, we form a new lower low. Initially this lower high can only be formed as soon as this lower low gets taken, and so on. If I were to put it more in example, if I'm just taking, sort of building a bearish trend right here, I can see as soon as we pull back, we haven't taken out this low. This is not a confirmed lower high up until the point where we actually take this level. This is still our most recent lower high. If we actually take out this level right here, then this becomes our new lower high. Pretty simple stuff. Yeah, it should be easy understanding from here. So initially, if a lower high gets taken out, then our expectation goes from bearish to bullish. So if I'm sort of touching on that in this example, initially we would need to take out this lower high to shift the trend. Initially, if the move originated from this lower low, and we sort of taken out this lower high, we saw the follow through, and we broke this lower high. Initially our expectation from continuous bearish structure goes to bullish direction now. So we can see we take out the lower high. What are we expecting? Higher high, higher low, higher high, higher low. We're now expecting a bullish trend. Simple stuff. On the flip side, bullish structure. Initially a bullish trend contains several bullish structures. Bullish structures are formed in a series of higher highs and higher lows. Again, we can sort of map this out for ourselves. Moving on, high low can only be formed when we take out a higher high. So these higher lows can only be formed when we take out these higher highs. Simple sort of touching back on the bearish structure that we did. We can only have a higher low as soon as we take out the higher high. So initially we make a new higher high here. This higher low is only confirmed the moment we take out this higher high, and initially this higher low can only be confirmed the moment we take out this higher high. So pretty standard procedure. Let's touch on something else. if higher low gets taken out, then our expectation goes from bullish to bearish. So same thing that we sort of talked about on the bearish side of things. Initially, if we saw a follow through from this level and we took out this higher low, our expectation from bullish to bearish will change. We will now start to expect bullish structure, lower lows, lower high, lower low, lower high. It's because we have taken out the more recent higher low. So again, that's just how sort of we look at the shift in trend, and how we look at bearish and bullish structures. We're going to touch on the smart money way in looking into structures. So again, just practice this for a few hours. We're going to be touching on some live examples, and we're sort of going to get into the application of structure in itself here. The application of structure in itself, again, it's pretty simple. For structure to actually break, we want to see a candle close. So we want to see the body of the candle actually take out the level. Initially, we have a low point of the structure, we have a high point of the structure. So if I'm mapping this out, this is my high point of the structure, this is my low point. Initially, we want to see this low point of the structure get ran with a candle, not with a wick. With a wick, it's invalid, then it's not structure. We're going to sort of touch on wick breaks at a much later stage and sort of what we use wick breaks for. But moving on, we can see we sort of run this level here, and this now sort of confirms to us that this level has been taken. On the flip side of things, same thing right here. We want to see a body close. We want to see that full-on candle. We don't want to see it with a break with a wick. And yeah, that's just pretty simple for us. The way we sort of map out the high and low points of the structure. Again, we will use the wicks for it. So, let me just remove this. So in this example, we can see the low point of the structure is the bottom of this wick. We will use the wick to sort of map out where we want to see the structure break. This is the low point of the structure. We break it with a candle body. And that sort of confirms that for us. Initially, again, on the flip side, we can see we map it out with the high of the wick, the high point, and that initially gets closed with a candle body. So again, pretty standard stuff. I wouldn't overcomplicate this, as this is overall very standard stuff. I'm going to be talking a little bit about I'm going to be showing you guys a little bit of live examples that I've sort of marked out here for everyone, so that you all can see what I am currently looking at and sort of some live application. So moving into the live application, touching it from this point onwards, we can see there's a break of structure to the downside. So we create a lower low, lower high. From this point on, lower low, lower high, lower low, lower high, lower low, lower high. Moving on here, again, lower low, lower high, lower low, lower high, lower low, lower high. And we can sort of confirm, that this was a whole bearish move, considering the series of lower lows and lower highs. This is sort of where we touch on that shift in trend. So we have taken out this lower high. Now our expectation goes from bearish to bullish. So initially, now we create a new higher high, higher low, higher high, higher low, and sort of moving on here, higher high, higher low, higher high, higher low, and continuing onwards to the upside. And again, on the flip side, this is our lower low. This lower low gets this higher low, this higher low gets ran, and our expectation goes from bullish to bearish. So initially, that's just how we look at structure here at Raven Capital. If I were to touch on a few characteristics, sort of touching on the application and just a few other things. Initially, this is our lower low. If I zoom in just a little bit more here, so you guys can see, we have a wick break. It's not valid. This is sort of where you can see we broke out with a wick. We did not see a follow through with the candle body, and we can sort of see how that wick failed to continue with the momentum to the downside. As soon as we had the body break, we sort of had that follow through, and we continued on with bearish momentum. We then made that low point of structure, which is the bottom of this wick, again where we sort of start to map out structure. We sort of created this nice beautiful archway, and all the way to the right side right here we had a close with a candle body, and so we just continued all the way to the downside here again. sort of with the wick, we map it out with the wick, which is the low point of the structure. We want to see the candle body break, and just continuing onwards to the downside. So on the flip side of things, again, we sort of have this low point right here, which we map out with the wick. We can see we now have that shift in trend. So this is now the high point, which is now our higher low. So from this higher low, we now expect bullish trend. Initially we map it out from this high point of the structure, and you know, again, it's just body breaks. We want to see candle body closes. Wick breaks are not valid. I'm just continuing onwards here. We map it out from the wicks, and we want to see candle body breaks. So we just do that up until the point we reach the high point of the trend, and we then start shifting. Again, the same thing happens here, where we start to sort of see that shift in trend. Again, we sort of have this high point right here, which is the high of this wick, and we have the low point of the structure, and we can see this low point of structure gets run with a candle body, which indicates a bearish trend. So pretty standard stuff, you know, nothing overcomplicating. I would just recommend watching this video a few times over and over again, you know, sort of testing a few of these examples for yourself, grasping the understanding. Definitely watching this video a few times over and over again, just so you can really catch the understanding of structure and how we see it here at Raven Capital. But initially, that's all from my side, guys, and yeah, I'll catch you guys on the next one.